Hi everyone! Did you miss one of our recent webinars? We've recorded one for you to review at a later time. My name is Kaylee.
And my name is Anne, and we are from the Taxsavers, and we are going to tell you some more about the tips and tricks for your 2023 income tax return.
Today we'll tell you a bit more about the Dutch tax return in three parts. Firstly, we'll tell you some general information about the different tax boxes, the deductibles, and the different type of income tax forms. Secondly, we're going to focus on the M form. We'll explain what it is and what you'll need to prepare it. And last but not least, we'll talk about the 30% ruling. For those of you who are not familiar with it, we'll explain what the ruling is, what the conditions and benefits are, and how you can apply for it. We'll start with the most important part, the Dutch tax system itself. The Dutch tax system is split up into three boxes. Box 1 includes income from work and home ownership. Box 2 is for income from having a substantial interest, and Box 3 is relevant for income from assets. These boxes have different taxation structures and tax percentages, which makes it important to understand the difference. We'll start with perhaps the most common box in the Dutch tax system, Box 1, which is the box for work and home ownership. If you receive income, whether it's from employment, pension, benefits, or your own business, this will all be taxed in Box 1. So within Box 1, there are two tax brackets applied to the income. Bracket 1 is applied to an income up to 73,000 euros, and Bracket 2 is applied to an income above 73,000 euros. The tax percentages are, respectively, 36.93% and 49.50%. You might be asking yourself, why is this box also for income from home ownership? Because owning a house doesn't automatically generate any income, right? Well, owning a house adds a small amount to your taxable income. This is called the owner-occupied home fixed rate, which is based on the WOZ value of the property. There are different percentages to get to this rate, varying from 0% to 2.35%, but the most common one is 0.35% for WOZ values below 1.1 million euros. So in the end, you won't be paying these flat rates on your income from work and home ownership because we have something called the general levy rebate and the labor levy rebate. The general levy rebate or tax credit will be applied to your taxable income if you live and pay taxes in the Netherlands. In 2023, the maximum rebate is 3,070 euros. From an income of 22,000 euros, the general levy rebates become progressively lower, and the threshold income to benefit from this rebate is 73,000 euros. So you are entitled to the labor levy rebate as well if you earn employment income, profit from self-employment, or results from other activities. In 2023, the maximum labor discount is 5,052 euros. So from an income of 37,000 euros, the labor discount becomes progressively lower. If your income exceeds 115,000 euros, you may not benefit from the labor levy rebate anymore. The second box in the box system is for income from having a substantial interest in a company. You have a substantial interest in a company if you, possibly together with your fiscal partner, own at least 5% of the shares, profit sharing certificates, voting rights, or share options of a domestic or foreign company, which should be a BV or a comparable entity. The income you get from having a substantial interest is either a regular benefit like dividends or disposition benefits. And while you don't pay taxes on the actual value of the shares, you pay a dividend tax of 26.9% on these benefits. If it's a benefit from abroad, the foreign withholding tax can be deducted from the 27% up to a certain percentage determined in the treaties. And in the Netherlands, your savings and investments are taxed in Box 3. The wealth tax works differently than the taxation on the income in the other two boxes. So as soon as your assets exceed the tax-free capital threshold of 57,000 euros, you have to pay wealth tax in Box 3. If you have a fiscal partner, this threshold gets doubled in a joint tax return. So unlike many other countries, we don't have a capital gains tax system in the Netherlands. You won't be taxed on the actual change in valuation, but rather on a hypothetical yield, which is fixed per category. These hypothetical yields get applied to the value of your assets on the reference date, which is January 1st of the tax year. The hypothetical yields in 2023 are as follows. For bank and savings, it's 0.92%. For other investments, it's 6.17%, and for debts, it's 2.46%. In this category, other investments include shares, cryptocurrency, and property. After deducting the tax-free threshold, the value of the categories get multiplied by the hypothetical yield to generate your income from assets. On this income from your assets, you pay a tax of 32%. As mentioned before, there are ways to lower your taxable income in box 1. You should think about healthcare expenses, donations, owning a house, annuity deposit, paid alimony, and travel expenses. And of course, there are conditions you have to meet in order to enjoy these deductions. It's always wise to check if one of these deductions can be applied to your tax return because it can make a difference for the outcome. The most common deductions in box 1 are the ones in the top row, so we'll explain a bit about these in detail. Some healthcare expenses are deductible in box 1. The health costs may not get covered by the insurance, they have to exceed the obligated own risk, and they have to be made with a non-contracted care provider. Also, they have to pass the threshold based on your income. As you can see in the table, your income determines how much you may deduct. For an income below €8,603, there is a fixed threshold of €149. For income above that amount, the threshold is either 1.65% or a combination of €753 and 5.75%. You don't have to submit any documents along with the tax return itself, but you should be able to show the invoice and the proof of payment if necessary. The second category are donations, for which there are two subcategories. There is a difference between ordinary and periodic donations. With ordinary donations, the deductible amount should be at least 1% of your total income, with a maximum of 10% of your income. In contrast, with periodic donations for which you can provide a donation agreement, this threshold does not exist. Donations can be deductible if made to a certified organization in the Netherlands. The three types are public benefit organization, association, or social interest organization. The type of organization, along with the type of donation, determine if it's deductible. The third main category is for expenses related to your own house. It's very important that the house is your main residence to make use of these deductions. If you have a mortgage on the house, you can deduct the mortgage interest that you paid. And in some municipalities, you pay a certain amount of ground lease besides the mortgage expenses. If you pay this periodically, you can deduct this as well. And the last one is one you'll always come across before buying the house, the financing costs. A few of the deductible financing costs are the notary expenses, the valuation expense, and the mortgage advisory costs.
Now that we've talked about the Dutch tax system in general, it's also important to explain you about actually filing a tax return. If you receive an invitation from the Taxsavers, it's mandatory to file the tax return before the given deadline. In the Netherlands, the tax season runs from the 1st of March until the 1st of May. Keep in mind that there are situations where you have to file without receiving an invitation. This is often the case when you've just moved to the Netherlands. It's your own responsibility to check your tax liability. Are you not sure? Feel free to reach out to us or to the Belastingdienst. Did you forget to file one of the returns from previous years? No worries. You can file the tax returns up to 5 years back. So there are multiple types of tax returns depending on your situation in that year. Which forms are there? We have the P form. This is the regular tax form if you've been living in the Netherlands for the full year. We have the F form. This form needs to be filed for a person who passed away throughout the tax year. Also, we have the C form, and this form is relevant if you didn't live in the Netherlands for the full year, but you did have Dutch income or property. Then we have the M form, the migration form. This is the first tax return that needs to be filed when you move to the Netherlands. As I mentioned before, the migration form is often the first tax return people come in contact with after moving to the Netherlands. Since you will not always receive an invitation to file this return, and mistakes often get made when filing this, we would like to tell you a bit more about it. When do you have to file this so-called M form? There are two options, for the year that you move to the Netherlands or for the year that you move out of the Netherlands. Compared to the regular income tax return, the M form is more extensive and takes more attention to file correctly. Because the tax office doesn't have any fiscal information about you yet, this won't be pre-filed like with the usual tax return. Another disadvantage is that they only provide this tax form in Dutch, which can make it a bit more complicated to file correctly. Within this M form, you only have to declare income about the period of the year that you were registered in the Netherlands, so all the income after your registration date. The taxation in box 3 works a bit different with an M form. Even though the reference date January 1st is not within the Dutch period of the year, you still have to declare the value of your assets on that date. Based on how many months you were actually a Dutch taxpayer, the box 3 taxes are calculated pro rate. So what information do you need to prepare the M form? First of all, you need general information like your full name, BSN number, date of birth, nationality, migration date, and the other country of residence. It's useful to also have a few documents ready when preparing the form. Depending on your personal situation, you will need the annual income statement, annual overview of the mortgage, the WZ value of your house, and the information about any additional income. When you've completed the M form or any other tax form and is ready to file, what's going to happen? After you or an intermediary file the tax return, it usually takes 3 to 4 months before you receive a provisional assessment. If your situation is a bit more extensive, it can take up to 3 years for the Belastingdienst to process it. With an M form, you will most likely receive a tax refund when you worked in the Netherlands for a part of the year. The reason for this is that your employer withholds income tax based on your annual salary, which is often not equal to the actual income. If you file the tax return with the actual information and it seems that too much income tax has been withheld, you will receive that part as a refund. And if you are entitled to a refund, don't forget to declare your bank account with the tax office, otherwise you can wait a long while for the refund. The third part of the webinar is about the 30% ruling. Some of you might already be familiar with it, but we will explain a bit more about the conditions and the benefits for those who don't know about it yet. So what is the 30% ruling? This ruling was created to compensate highly skilled migrants for the cost of moving abroad and the possibly high living expenses. At the moment, the benefit is valid for 5 years. When should you apply for it? If you just moved to the Netherlands, you need to request it within 4 months of starting to get the full benefit from the starting date of your contract. If you request it later, those first months will be reduced from the 5 years you were originally entitled to. If you benefit from the ruling, up to 30% of your gross annual income may be paid out to you tax-free. As you can see in this example, the net payment is €1,500 higher than without the 30% ruling. But this is not the only benefit. For the people who already got it approved before 2024, they may also opt for the partial non-resident status. This means that you will not have to declare any information for Box 2 and Box 3 in the tax return. Since the ruling is slowly changing, this is unfortunately not a benefit anymore for new applicants. When can you apply for the 30% ruling? There are a few conditions you have to meet. You need to work for a Dutch employer. The contract needs to be agreed in writing. You need to be recruited from abroad, which means more than 150 kilometers away from the Dutch border. And the salary norm depends on your situation. For 2023, if you have a master's degree and you are younger than 30 years old, your gross annual income should be above €31,891. If you don't have a master's degree, or if you are above 30 years old, the norm is €41,954. In 2024, these thresholds changed to, respectively, €35,000 and €46,000. If you meet all the conditions, you can send a request to the Belastingdienst in collaboration with your employer. From your employer, you need to know their name and address, the wage tax number, the phone number, and of course, their signature. Your own information that's relevant for the request is your identification, BSN number, address, your contract and signing date, your first working day, and the starting date of the 30% ruling. You also need to present your CV. We hope that we've made your tax situation a bit easier, but we understand there might be some questions left. If you would like us to contact you for any tax matter, so that can be help with the income tax return, the 30% ruling request, the VAT return, or a consultation, feel free to send us an email at info@taxsavers.nl or fill out the contact form on our website.